First, I want to start off here in California because when it rains, it pours, just like the storms that we saw this year. And now that we're just a little bit closer to summer, we are learning another home insurance provider is fanning the flames. Allstate has stopped accepting new policies in California because of wildfires, among other things. So you already know we're bringing in Becca Hobegger with tonight's main point.
You know, Alex, if you buy a home in California and you're looking for an insurance policy, don't look to Allstate, State Farm, or AIG. AIG got out of California's homeowners insurance market altogether, whereas Allstate and State Farm are keeping their current homeowners insurance policies, just not taking new ones. Now, for many people in the state, this is a familiar story.
We keep our property pretty well clear.
Back in 2019, I spoke with Laura and Charlie Callahan, who'd owned their home in El Dorado County for more than 25 years.
We had our homeowners insurance for over 20 years, and we got the letter, as people refer to it, and we were canceled. I'm now paying 4 times what I was paying before. It's gone from less than $1,000 a year to almost $4,000 a year.
At the time, California Insurance Commissioner Ricardo Lara was holding town hall forums, hearing from people living in the foothills who were finding their homeowners insurance policy canceled or the cost sharply increased.
So you went from $24.83 a year.
Yeah, to would be $48.85.
Wow.
Yeah.
Wow.
In other words, it won't surprise folks in the foothills and other rural, more wildfire-prone areas to hear that now State Farm, Allstate, and AIG have stopped offering new homeowners insurance policies in California, with AIG leaving the homeowners insurance market here altogether. Allstate paused new homeowners, condo, and commercial insurance policies in California last year so we can continue to protect current customers, a spokesperson told us. State Farm stopped taking new applications, including all business and personal lines property and casualty insurance effective May 27th, the company said. The California Department of Insurance says current customers will not lose their insurance and people are still able to renew their existing policies. State Farm added they made this decision due to historic increases in construction costs outpacing inflation, rapidly growing catastrophe exposure, and a challenging reinsurance market.
The insurance that we all never want to use, we had to rely on, and State Farm was one of the big companies that had to pay claims because that's the business they're in.
While Allstate and State Farm are now limiting operations in California, more than 100 companies are still offering homeowners insurance in the state, though the Department of Insurance says it depends on the home's features, its wildfire risk score, and the community in which it's located.
Some people are paying more for their homeowners insurance than they are for their mortgages.
And the thing is, this isn't just happening in California. This is happening in some other states as well, right?
Yeah, you know, Louisiana and Florida, those are both good examples. They are, the Insurance Information Institute says dozens of insurers have chosen to pull out of Louisiana because of historic record levels of hurricane activity over the last few years. And in Florida, the Institute says things like litigation and too many fraudulent roof replacement schemes have led to insurers deciding to no longer write homeowners insurance policies in that state. And, you know, for more information on this story, including where you can find insurers near you, you can head to abc10.com/to-the-point.